All right, so chapter 18, the entrepreneur's options. All right, so this means if you want to start a company, how do you do it and which kind of company is going to be best suited for what you want to do? So first off, let's define an entrepreneur. An entrepreneur is someone who initiates and assumes the financial risk of a new business enterprise and undertakes to provide or control its management. Okay, so it's an entrepreneur, you hear that word all the time. What's an entrepreneur? So they're going to initiate a new business, assume the financial risk for doing so, and then they're gonna provide and manage the company. Okay, so when you do that, number one, entrepreneurs, and there's a typo in this, so just follow along with me. Entrepreneurs setting out to start a business should consider the following factors, that's my typo, factors when deciding what form of business to organize. So again, you're an entrepreneur, you want to set up a new business. What do you need to take into account to decide what kind of business you're going to set up? So point A, the ease and expense of creation. The ease and expense of creation. Essentially, how involved, how risky, how big is your company going to be? Meaning, how intricate do we need to get with setting it up? Or are you just going to do a little side gig where, there's no risk and whatnot? So that's something we take into account is how expensive are you trying to get when you want to set up that company? Point B, the owner's liability for the entity's obligations. So there's different ways to structure it to limit your liability if something goes wrong with your business. And we'll talk about that with some of the other types of companies. Point C is tax considerations. Tax considerations. When somebody comes to my office and says, I want to set up a new company, I will first question out of my mouth, who's your CPA? Who do you work with on your taxes? Because I want to make sure that whatever you're doing, and you may say to me, oh, I want to set up a corporation. Well, when I talk to your CPA, he may say, no, let's do it this way. So we always take into account and work in conjunction with your CPA so we're not doing anything that's not going to be, advantageous to you from a tax perspective. And then point D is the need and ability to raise capital. The need and ability to raise capital, to raise money. Basically, the money to get started. Do you need partners involved? Do you, what is your projected business plan and how much money is it going to take to get you there? So once you consider all of those things, then you can decide what type of business you want to set up. Because you want to be in business, but how does it need to be organized? So we're going to talk about the major forms. We're going to talk about the sole proprietorship. We're going to talk about the partnership. And then we're going to talk about the limited liability company. The corporation gets its whole own chapter because it's its own thing. So we're going to talk about these first three. And you'll kind of see, just be thinking about the different types of businesses that you encounter every day and just kind of think about how they're set up. So number one is a sole proprietorship. This is the simplest form, that's the first blank, the simplest form of business organization in which the owner is the business. Essentially what this means is you go through zero formalities to organize a separate business. You just are the business. A lot of times, it would just be, me saying doing business as when really it is me. I am the business. There is no separate organization. Okay, so it's the simplest way because you don't have to set anything up, where the owner is the business. Can anybody see why that might not be a good idea?
If you get sued, you
exactly. So we'll talk about the advantages and disadvantages, but anytime somebody comes to me and says, I don't really know if I want to go through all that pain of setting up a business. Well, you know what? If you get sued, it's going to be worth it. Because if you're a business, the business gets sued. Your personal assets generally speaking, are not on the line. But if you are the business, you have no extra layer of protection aside from insurance and stuff. You are the business. So let's talk about it more. So point A, the owner reports business income on his or her personal income tax return because you are the business. There is no separate tax return getting filed for the business because there is no separate business. You are the business. So you're going to report that income on your own tax returns. Okay? So point B, you are legally responsible for all debts and obligations incurred by the business. So, normally with a business, the business is going to be liable on its debts unless you've, personally guaranteed that you would pay those back. The business is going to be liable. Here, you are the business. So you personally are legally responsible for all of the debts and all of the obligations. Now, there's going to be some instances where it may make total sense to be a sole proprietorship and not go through the formalities of setting up a business. I'm a mom. I order a lot of monogram stuff. There's a lot of people that do monogramming. They do embroidery. And my husband, he's the coach at St. Mary. He gets logos put on everything, for the team. Do you think that's a real risky business? No. And I'm not downplaying. You can make good money doing embroidery. That's not a really risky business. You're probably okay to just operate that as a sole proprietorship. Who's really going to sue you? Okay, if you ruin a jacket, maybe you're out $100 to repay them. That's not a real risky business. But I had somebody come to me and say, well, I'm going to work on heating and air units, but I just don't think I'm going to set up anything else. Are you kidding me? You're working on people's houses. Their houses. Their heating and air units. You mess that up, you're out a lot of money. You mess that up and it causes damage to the rest of their house, you're going to be out a lot of money. So you just kind of have to think, what's the downside? What kind of risk is involved? And really, if there's any bit of risk involved, it's so worth it to go through the couple of steps and the $500 to get yourself set up as a new business. So what are the advantages, though, if you do decide to do a sole proprietorship? Number C1 there, it's easy and inexpensive to form. Obviously, you can still get bank accounts, that kind of stuff. So you are, you're kind of doing some stuff in the business's name, but it's not its own entity. You are that person. So obviously, it's going to be very easy and inexpensive to form. Point 2, the proprietor receives all of the profits. Obviously, you're getting all of the profits that are coming in because you are the business. And point 3, the owner has flexibility and full control over business decisions. They don't have any partners to go to. They don't have a board of directors. They don't have anybody they have to run anything by. They have full control and flexibility over that company. So there's the advantages. And sometimes it makes sense to just not set up a separate business, do your own thing. But point D there, the disadvantages of not setting up your own company. Point 1, the proprietor has unlimited liability. There is no limitations to the amount of liability that you could have if something goes wrong. So the proprietor has unlimited liability and puts his or her personal assets at risk. Okay, you are putting all of your own stuff at risk if you don't have it shielded in a company. Point 2, the entity will not survive the proprietor's death, disability, or retirement. Okay, so the entity will not survive the proprietor's death, disability, or retirement because you are the business. So there's no succession plan. If you've created this big, successful big business and you pass, well, there's obviously no succession planning or other members to keep it going on because you were the business. But the main disadvantage is your unlimited liability. Okay, so any questions on a sole proprietorship? Pretty much makes sense. Okay, number 2, a partnership. So a partnership is an association of 2 or more persons to carry on as co-owners a business for profit. Okay, so if the 4 of us, it doesn't just have to be 2 people, If the four of us wanted to form a company, we could do it by way of a partnership, where we have a partnership agreement that controls how we operate. Now, why would you do a partnership? Okay, so point A there, and let me just tell you this first. So the blank there for point A is the Uniform Partnership Act. Okay, on page number 2, that's the first blank. The Uniform Partnership Act controls or governs the operations of a partnership if you don't have an express agreement. So if you don't have an agreement between the four of us, if we don't have an agreement and something goes wrong, that act, the Uniform Partnership Act, it's going to control what happens. But we always suggest to people, have an agreement between the four of you about everything for the control of the partnership, so that you don't have some random statutory act that's, controlling. Let's have an agreement that makes it all very clear. So point B, a partnership is treated as an aggregate of the individual partners, which means that the partnership can sue or be sued, unfortunately. It can collect judgments, own real property, and have all accounting procedures performed in the name of the partnership. So it's its own organization. Okay? So it's an aggregate of all the partners. You can sue, you can be sued, you can own real estate. Everything's done in the partnership's name. Now, point C is one of the reasons that you would see people set up partnerships a lot. And that's because it's a pass-through entity, meaning that the business entity has no tax liability. Instead, its income is passed through to the owners, and they each pay taxes on their income as individuals. Okay, so this used to be a big perk for setting up a partnership. So even though it's its own entity, it doesn't have its own tax liability. Instead, all of us as the partners would recognize, okay, how much did you make this year in partnership income? All right, 10 grand. That would just go on my own tax return. So it was simpler to have it done that way. With a corporation, it's got all its own filings. But with a partnership, that was one of the perks, is we can just carry on as partners and then recognize all the income on our own tax returns. Now, I'm here to tell you, though, we see less and less and less of partnerships and more of number 3, limited liability companies. And the reason, and I'll give you all these blanks, but the reason we see more and more of these is you have all the protections that a corporation would have, but you get to be taxed like a partnership. So the LLC it has this extra layer of protections like a corporation does, but it doesn't have to file its own tax returns. You can still have the income flow on through to everybody that's involved and them just pay their own taxes on it. Does that make sense? Okay, so LLCs are all the new rage, and not just recently, like they have been for a while. Instead of setting up corporations, a lot of times people set up an LLC now because it's so much easier to set up, so much easier to maintain than a corporation. So what is an LLC? Number 3, it's a hybrid, HYBRID, a hybrid form of business that offers the limited liability of a corporation and the tax advantages of a partnership. Okay, so the whole idea of setting up a corporation was to limit your liability. So that the corporation's liable, but you personally are very limited. You're really only liable for anything you've invested in it, because that may be at stake. So you get that same protection with the LLC, but you also get the tax advantage of being taxed like a partner. So it's a really popular form of business. So point A, to form an LLC, articles of organization must be filed with a central state agency. like the Secretary of State's office. And I'm gonna go get this computer turned on and show you guys, let's see, what that looks like. Oh, that's not my password. What is my password? Hold that thought, hold that thought.